Hello, welcome to today's video. In the previous video, I shared about credit score, what you should know about the things that affect your credit score, how you can also get your credit reports. I told you about Experian and Credit Karma. So if you have not seen that video, make sure I'll put a link to it. Make sure you're checking it out because there are some very valuable information for you to know on that video. And please make sure that you subscribe to this channel, you're liking the videos, and put in the comment box anything that you found valuable on some of these tips and anything that you really want me to talk about in other videos. So today I'm talking about your credit report. How can you influence your credit report? How can you influence your credit score and increase it from whatever it is now to where you want to take it to, which is of course the maximum. And I'll just first of all talk about the benefit of that. The benefit of having a very good credit score is that you get to have a range of negotiable rates from banks, from lenders, whenever you want to get a mortgage. So the higher your credit score, the more they're willing to lend you money, the higher the amounts that they're willing to give to you, and the better the interest rate that they'll be giving to you on your loans. So you want to pay very good attention to your credit score. And another reason is that anytime that you want to maybe get a new credit card, you want to buy something on credit, it also boosts your credit worthiness. So they will check your credit score and make sure that you've got a very excellent one, not necessarily the full 999 thereabout, but at least you've got a reasonable band of credit score so that they ensure that you have good repayment pattern. Okay, so I'm going to get into today's video about what you can do to influence your credit score. The first one I'd say is borrow. So anytime you have the opportunity to borrow, take it. Bearing in mind that you also have to have a plan of the repayment. In the previous video, I talked about how your repayment pattern can affect your credit score. So I'm saying borrow in the sense that if you have the opportunity to buy some electronics or your phone, your whatever it is on credit, make sure that you're taking that advantage. And a good number of times, some of the vendors who offer those kind of opportunity, they'll tell you that for the first 3 months is 0% interest, or for the first 6 months, or even for the first 9 months is 0% interest. And that's a good opportunity for you in the sense that if you know that you have the cash to buy this outright, but you want to boost your credit score. So you can buy that item on credit, maybe your TV thereabout on credit, and they give you 3 months of 0% interest. Then you can pay back by the second month or before the end of the third month when the interest will start counting. That way you would have still used your cash at some point, but you would have used your cash later than now. And then you would have boosted your credit worthiness in terms of the repayment of the loan that you've taken. So anytime you have that opportunity, make sure that you're borrowing. And the second thing I'll tell you is try to get a credit card if you don't have one, or you get an additional one. For example, myself, in our family, we have HSBC credit card and we have American Express credit card. So there are various credit cards that you can get. You can get British Airways, you can get Amazon. Lots of vendors actually even offer some of these credit cards, but make sure that you're checking what the interest rate is. Now, as a form of efficient way of using credit card, I'd say that when you're using your credit card, have it in mind to pay back at the end of the month or as soon as you have the money, so that you're paying as low as no interest on your credits, and you're taking advantage of using that opportunity to boost your credit score. So whenever you're getting the credit card, check out for what the interest rate is, and then make sure that as a personal financial practice, you're paying back, if not all of them, majority of whatever you have used your credit card to buy. So for example, during the month, you've bought, you have a credit limit of 1,500 and you've bought items of maybe £600. By the end of the month, pay the whole of the £600, or understand the minimum limits that you have to pay and pay it. The minimum limit, however, will only ensure that your credit score is not affected, but you will be paying interest on the outstanding balance, depending on the terms and conditions of the credit card that you have gotten. But make sure that as a financial practice, you're paying back all of your credits on time. And when I said that you should get additional credit card, it's basically to increase your credit limit. The higher your credit limit and the lower in terms of between the 4% and 30% that you're making use of your credit limit, the more you're boosting your credit report, your credit score. So you want to increase your capacity, however, you're being disciplined with the way you're using your credit limit, okay? So that's another way that you can boost your credit score. So basically, if you have a current account and you have a credit account, you've got enough money on your current account to buy whatever you want to buy, but because of your credit score, you want to buy on your credit card and then you can repay from the current account. And the last thing I'll say here is make sure that you're not opening and closing your current accounts anyhow. So the longer that you've held your current account for, the better for you. For up to 6 years, it can add an additional score to your credit score. So if you've opened the current account for the first time, try as much as possible to maintain that current account for as long as possible. And then when you're opening new accounts as well, don't open more than one within the space of 6 months. So in the last 6 months, you should only open just one current account. So within the space of 6 months, you are opening maybe three, 4 current accounts. It sends a bad signal to the credit reporting agencies, and that can have an effect on your credit score. Now, I'll talk about you can also dispute the information held on your credit score. And this is what I mean. If you check the Experian credit report or the credit scammer and you realize that there's some information that are not right, and this could be because there's been a mix-up of names. Someone else's name who is similar to yours has been captured in the system, and then the issues on the person's name has now been brought into your system. You can always dispute that. So if you register with any one of these two agencies or any one of other credit reporting agencies, there's an opportunity within their platform for you to report any information that they have about you that is not correct. So there's every likelihood of that. Bear that in mind. But you can always correct that, dispute that, and then they will update your credit score or your credit report. And one of the other reasons, again, about avoiding opening a lot of accounts within the space of 6 months is that whenever you're opening an account or you are getting any kind of credits, there is a search that is made on your name, on your account. And so you don't want to have ad searches that can have a footprint on your credit report to be done over and over within the space of 6 months. That is sending a bad signal to the lenders. Okay, so avoid opening new accounts, lots of new accounts within the space of 6 months. Avoid getting lots of credits within a space of 6 months. Okay, thank you for watching today's video. I hope that you have enjoyed it and you have found some very valuable information in today's video. Please make sure that you're subscribing, liking the video, and putting it in the comment box to encourage, and you're sharing to as many people who would also find this to be helpful to them. And I'll see you in the next video. Bye for now.